Hey guys, Akil Stokes here. Welcome back to another Trading Edge video, your weekly look around the markets. I have an early Christmas present for you. No, it isn't the best trading opportunity ever that has a 100% guaranteed of winning. It is the fact that I am not on camera and now you don't have to feel inadequate about yourself after looking at a perfectly beautiful human being for the next 5 minutes. You're welcome. Now, this is actually the second time I've recorded this video because the first time I went through it, I got way too complicated and I feared that it would scare people away. So I wanted to restart and do this. I'm going to take a very simplistic look at this opportunity. And then after I do that, I'm going to go back and add kind of the complicated method as well. And hopefully that we can kind of feed each group of trader. The newer trader doesn't have to get overwhelmed and be like, oh my gosh, this is too confusing, I can't do it. Because if you know me, I'm very simplistic in my approach. Go look at past videos, find structure, find more structure, trade from structure to structure, boom, that's about it. But there are also little kind of, I don't want to say complicated, but there are more mastery things that you can do within the basics to give you more clues. And that's something that comes after you've mastered the basics. And I think that's cool for traders that are at that point as well. So just bear with me in this video. So we're going to be on a NASDAQ here. And I'm going to start on the daily chart. And I want to start off by kind of reading the trend, right? So we're going to reverse engineer this, right? This, if I zoom in, give myself some more real estate, up here is a new structure high, right? This is our most recent high. If we work backwards from there, this move down here is going to be our previous outside return. And then this move up here was going to be our previous new structure. Oh, nope, don't want to enter a ticker number. There we go. This is going to be our previous new structure high, right? And why this is important, right, is because, well, having the ability and the skill of reading a price chart is important, right? I can't tell you how many traders I speak to, both on our platform and out on internet land, who overlook training the skill of reading a price chart. And they come to me complaining about, hey, Akil, I can't make right predictions and I can't understand which way the market is likely to go. And it all comes back to, well, you haven't done the work that allows you to do those things, right? The ability to properly read a price chart allows you to make better predictions, and trading is all about making predictions, right? It's not about a magic entry. It's not about a magic system or anything like that. When it comes down to it, it comes down to a big bulk of technical analysis and fundamental analysis as well, is being able to make the right prediction about what the market is likely to do. That is by far the majority of the importance of trading. There are many entries that you can use to get involved, money management, psychology, all of that is important. But at the end of the day, market needs to move in the way that you think it's going to move in order to make money, right? It comes down to that. It's simple. And having the skill of reading a price chart is so important. So for you guys that are on the tier 1 trading platform and you're thinking about skipping or rushing past the foundation course, don't do it. I'll find you. I'll find you and I'll kill you. Well, we shouldn't be doing threats on YouTube, Akil. Sorry, I take that back. Let's edit that out. I won't kill you. I will punish you severely and make you feel ashamed. The markets will kill you. I don't have to kill you, to be honest with you. The markets will do that for me. So, yeah, take the time to learn. So, anyway, what this means is this. When we talk about violations of a trend, in order for a trend to be violated, we need to break and close below this outside return. And the question I ask you guys is, have we broken and closed below this outside return? The answer is no, right? So we are still clearly in a bullish trend. So there's no need to look to get bearish. We know that the underlying trend is bullish, bullish, bullish. We've just created our directional bias. And we know that because this is bullish, this is nothing more than a pullback, right? You see it a million times on the chart. What goes up must come down, and then it goes up again. So let's put this in perspective of what this is. Now, should have talked about this in the beginning, I forgot, but the markets have been scary lately, right? And the reason that the markets have been scary were for two reasons. One, remember that FOMC interest rate thing I told you about in last week's video? Yeah, it happened. And the market reacted just as I thought it reacted, right? We saw dollar strength despite an interest rate cut because the market is looking forward to what that means, right? Go check out the video I did this past week on the flag pattern on the Dixie, and that explains it all. But two, we also had this little government shutdown thing that was looming. So we had the fear of the monetary policy we had the fear of the government shutdown right before the holiday season. It was kind of like the market caught fire a little bit, and then the government shutdown kind of just like, oh, I'm gonna go sprinkle gasoline on here, splash, 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 and there was more fire, so a massive panic. Now, the good news is we've gotten, like, after the deadline, for whatever those deadlines actually mean, because they're written but apparently not enforced. There was an agreement that came on the government shutdown deal. So that should bring more positivity in the market, which is going to line up right with our bullish trading opportunity. There's also something called the Santa Rally, which I'm not going to take time to explain here, but if you want to learn more about the Santa Rally, go back to the Trading Coach Podcast, episode 911, and it talks about this phenomenon called the Santa Rally. Is it real? Is it fake? Should you use it in your analysis? Ooh, Akil gives his opinion in episode 911 of the Trading Coach Podcast. But that is something to take into account as well, especially during this time of the season, because we are in that Santa Rally period. So we have a pullback here. If we're expecting a continuation in our bullish trade, here's what we're looking for. And again, this is going to be the simple version. Let's go down to a 4-hour chart. And we see what happened on the 4-hour chart was this. We came down and we put in a complex pullback, right? Meaning that we put in a 2-leg pullback. We came down, structure low, we came up, outside return, we came down, new structure low right here. And what we most recently did was we violated that level. So just as I spoke about how a violation of the outside return here would mean a violation of that bullish trend, if you're someone that's looking at this as maybe like a smaller micro trend, a micro bearish trend in the opposite direction, we just took out the outside return, which violates that as well and puts us back in what's called a bullish rotation. So that means we can look for buying opportunities. Right? This level also comes to, and again, I want to make sure I don't go to the fancy part yet. I'll save that for later, so let's ignore that. So let's go down one more time from to the hourly, and then what we have here is our first chance at getting involved, right? We had the violation of our trend right here. We're starting a pullback in its own right. This pullback, right, waiting for your reason for entry, of course, is going to be your opportunity to get long and trade this bad boy right back up to these highs. And of course, with this being the stock market, potentially hold even further. Actually, I haven't done this part yet, but let's see if there's a 1618 up there for targets. Swing low to swing high and back down. Yep, we got a 1618 right at a little bit above the highs. I'd get a little bit below that. We may have an AB equals CD pattern there as well, depending on where this reverses. So that is the bigger generic trading idea that we're looking for here. Now, let's go to the more complicated version, right? So most of the same stuff is going to come in handy. We're just going to add one more thing to that. So we know that on the daily time frame, this is just a pullback. However, you may be looking at this little guy right here and saying that, well, on a 4-hour time frame, I actually see this as an outside return as well, which means this is a violation of our bullish trend, and we are now in a bearish rotation, right? And that is true, and it's something that it's a technique, I should say, that I used to trade called the Fibonacci inversion. I only did this on the day trading time frames. I never did it on the higher time frames, but the Fibonacci inversion technique, put it in the simplest terms, is when the market tricks you into looking like it's doing one thing, only to pull the rug out from beneath you, whoop, insert cartoon rug being pulled, and do the opposite thing, right? So here's what that means. We know that we are in a bullish trend, right? Our main outside return was right here. This is the level based on our higher time frame, if you're using the daily, that needs to be violated, right? We can draw a Fibonacci retracement from that level, swing low to swing high. And we see that the market came back to two very important levels. One is the 50% retracement, which actually isn't a Fibonacci number, but is a highly psychological level because human beings like to think in halves. And then the other one is the 618, which is a Fibonacci retracement. It is known as the golden mean. Fibonacci's are interesting if you ever want to ruin your life for a few days. Go down the rabbit hole of Fibonacci's and learn about the ratios from your middle finger to your wrist and your wrist to your elbow and how rabbits reproduce and the petals and flowers and all other types of dark, mysterious stuff. Speaking of dark, mysterious stuff, we're going to talk about the three-body problem in an upcoming episode of the Trading Coach podcast. If you want to go down another, even darker hole, or watch a pretty good series on Netflix, the three-body problem is another thing you can research. But back to the point, these levels are important, right? I told you, like that's what I would have said in the simplified version. This is the complicated advanced trader version where we talk about weird science stuff. So we have that going on. But if we're also seeing this as an outside return on the lower time frame, what I want to do here is I want to take my Fibonacci extension from my swing high right here. I'm going to invert it, so pull it from right to left instead of left to right, down to here, and back up. And you're going to see that I have a 618 retracement, or 1618 extension, excuse me, that's the level I'm looking for, right down at this level as well, and that's what the market tested. And again, that Fibonacci inversion trade is kind of like this, right? It's basically playing the end of a complex pullback where the market comes down, it makes it look like we're in a brand new trend, and everyone panics and sells because, oh my gosh, the bullish trend is over. We must be in a bearish trend. Let's sell, 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 sell. And what that does is that opens up the liquidity for buyers to get involved and then trade it, if I get the right arrow, trade it back up like that, right? On a lower time frame, it looks like a violation of trend, but it's one of those deals where you have to see the big picture versus the little picture and how the market works in fractals, and there are trends within trends and with trends. So we can add that to the analysis, that Fibonacci inversion. You can see why I saved it for the later part of this lesson. Everything else after that is the same, right? We had the Fibonacci inversion, which completed down here, again, boom, right on the 1618 retracement. If you're looking for confirmation from that, right, we now have our confirmation in the fact that we took out this previous outside return, and now we're looking for a way to trade it up. Now, just to add on a few different ways to trade this up, one is going to be the pullback, right? Assuming you're not involved already, right? One is going to be the pullback. Price action continues to pull back, and you look for whatever reason you need to trade right here. Another one would be waiting for a fresh break, right? So if you're someone that requires a true trend, right, we have our starting point down here. Starting point. We have our new initial structure high right here. This current move, assuming it stops and goes up, would be an outside return. Struggling with words here, outside return. And then we would have a new structure high and a defined trend by how we teach it at Tier 1 trading once price action breaks and closes above this line right here. So a few ways you can do this. If same thing we spoke about with breakouts in the video I shared a few, 2 days ago on flag patterns, right? If you're an aggressive trader, you could do something like putting a buy stop right above here, right? What a buy stop is going to do is going to get you involved in the trade as soon as it goes past this level. So as soon as price passes this level, boom, you're involved on the way up. You can wait for the higher high, higher close for confirmation of the new trend and the violation of this level, and then buy at market. So that would be like if price action were to do this. I'm going to move this to the side. That, and then you would buy right at market, the next bar market we call it, on the way up. Or you can wait for, if you need confirmation, wait for another violation, another pullback, and then a chance to ride it up. So again, many ways to attack this. I'm actually going to put out a video hopefully this week, maybe next week. I have it done, I just haven't uploaded it yet, talking about different entry reasons from your aggressive to your conservative. So make sure you stay locked into the channel for that. But the rest of it is the same analysis that we did earlier, where our expectations that we come up and retest our previous structure highs and then even progress higher. I just wanted to add that extra splash to it because, I want you guys to understand that reading, trading is simple, right? You guys know the structure stuff, right? Trading is simple, but sorry about that, puberty. as you master the basics, it allows you to open up energy to focus on other things, and other things enter the equation, right? As traders, we're always learning. And those other things don't necessarily make like drastic changes to your trading. You don't go from one style and flip 360 degrees to another style, but rather those other things are more clues that you can add, and you can find those grade A trading opportunities versus just the grade B ones. And again, there's going to be a video coming out on that soon, at some point, maybe, probably over the holidays. But that's how you grow as a trader. You master the basics. That is your core, your foundation. That's literally why we call it the foundation course on the platform. And then after you have that solid foundation, now it's easier to add this and that and that and that, which just continue your improvement. Think about it being like a soccer player who is fundamentally really, really good but doesn't do anything fancy. Well, now that once they have the fundamentals down, now they can add the extra stuff, where if you're never fundamentally sound, you can't do any of the extra stuff because you're just going to be sloppy and whatnot. So that's the vid.
I want to be the best in the game, invest in my name, check no restraints, I'm obsessed with the pain, I ingest, I retain, assess and I change, possessed by the thought I'll be free one day from society's restraints, money, clout and fame, mud, disease, a plague, we all love to hate, have to play the game, have to make a name, all our insecurities are on display.